I just want to tack on here something just to pay attention to the details that are happening within the macro space, because for me, the macro space, what happens in macro space tells me what strategies I could run intraday, what can I bet on, what kind of risks I'm opening myself up to. And we're seeing cuts around the world, massive cuts before any major tragedy has happened. We're seeing gold up. What is it? All-time highs for gold now, quietly marching its way up to 3,000.
It's back a little bit today. We have a little bit of a pullback, but yes, Bitcoin's looking like it could be the year-end winner, though. By the way, year to date we're up 46%, which is beating everything else out there.
Absolutely. But gold only goes up because the major purchasers for gold are central banks. I don't know if people know this, but central banks are the ones who move the gold price up. If central banks are not buying gold, there's no point in buying gold. And so they're buying gold like crazy, and central banks only buy gold when they think there's some sort of systemic risk. It's just that systemic risks can be there for 3 years before the trade actually happens. The other thing, the two other things to see is that real estate prices haven't really adjusted with the rate cuts, or real estate expectations, not prices, but expectations hasn't adjusted. But the thing that's the most telling is that the 50 basis point cut hasn't reflected within the bond market. We're getting this steep in our curve where interest rates are still rising. Well, it came down and now it's rising still. And so long-term rates are going up, which means that the bond market is saying, hey, we still think inflation is a long-term issue, which is very interesting. So bond prices are falling. You wouldn't expect that. You wouldn't expect bond prices. You wouldn't expect yields to be going up on the long-dated bonds and gold going up and central banks cutting everything really quickly all at once without saying what the danger is. So there's something brewing here, but I think that's a second quarter 2025 thing to deal with. And between now and then, skyrocket.
That said, there were some recent changes here just in the last couple of days. Even on the 1 month curve is starting to come back up. But you do make a good point. Some of the longer dated treasury bills are starting to pull back a little bit. As the 2 month, the 1 month have gone up over the last couple of days alone. So it is interesting to see how the bond market has responded to this. I assume you meant treasury federal bonds, not necessarily the corporate bond market.
No, the corporate bond market, the LQDs, the investment grade bonds, those are doing well. But the the 2 year up to the 20 year, it's an interesting story that's happening there.
It is. I'm with you there. Yeah.